Because the world is no longer built only on money. It is built on debt, and more importantly, on trust. Even the money you carry in your pocket today represents not a physical value but a promise. A promise of a state, a promise of a bank, a promise that an economy will still be standing tomorrow. And as long as people believe in this promise, the system works. But the moment trust breaks, even the largest economies in the world can descend into chaos within weeks. This is exactly the most frightening aspect of the modern financial system. Because the foundation of the system is not steel, it is belief. And no belief system in history has lasted forever. But to understand this, we first need to go back in time. The year is 1694. England is at war with France. The war drags on. The gold in the treasury runs out. Royal resources begin to shrink. At that time, to be powerful, you needed physical wealth. Gold, silver, land, tax revenues. But England did something different. The government knocked on the doors of wealthy merchants. It asked them for loans. In return, it promised to pay interest in the future. Today, this may sound ordinary. But for that era, it was a revolutionary idea. Because for the first time, a state was spending money it did not yet have. And this was the moment that changed the course of history. To manage this system, the Bank of England was founded, the ancestor of modern central banks. The state was no longer limited to the resources it physically possessed. It could use people's trust in the future. This was an incredible power. Because now, to wage war, you didn't need to own gold first. It was enough for people to believe in you. England sustained its wars through this system. It built a larger navy. It turned into a global empire. And other states saw this. France copied the system. The Netherlands developed it further. America built its rise on this model. Railways were built with debt. The Industrial Revolution accelerated with debt. Wars were financed with debt. Cities grew with debt. And the world slowly transitioned into a new order. Now the most powerful countries were not those with the most gold. They were those that could gather the most trust. Because if people were buying your bonds, it meant they believed in your future. This is exactly the idea the modern financial system is built on. Trust. Today, states issue bonds. Banks buy them. Investment funds buy them. Pension systems buy them. Central banks step in when needed. New money is created, and the system keeps turning. But there is a very important detail most people do not notice here. In the modern economy, most of the money in circulation is not physical. It is debt. Yes. Today, the majority of the money in the world actually represents someone's obligation. A mortgage, a corporate bond, a government bond, a credit card balance. The modern economy creates new money largely through credit. And this completely changes how the system works. Because to produce money, it is no longer necessary to first produce value. Creating new credit is enough. When a bank gives a loan, it is actually creating new money. That's why the modern economy has to keep expanding. Because the moment the system stops, the chain comes under pressure. You can think of it like a giant bicycle. The moment you stop pedaling, you fall. The global economy works the same way. Constant new credit is needed. Constant new investment is needed. Constant new consumption is needed. Because for old debts to keep circulating, new money must continuously flow into the system. And this is why today, we are living in the greatest debt era in human history. Global total debt has now exceeded $315 trillion. This figure is roughly 3 times the size of the world economy. Pause for a moment and think about that. Humanity is carrying far more debt than what it produces in a year. And yet, the system continues to function. Why? Because in the modern financial system, what matters is not the size of the debt. It is whether people believe in that debt. This is why the United States remains at the center of the system despite being one of the most indebted countries in the world. Many people think the US is mainly indebted to China, but the reality is far more complex. Most US Treasury bonds are actually held by American institutions, banks, pension funds, insurance companies, investment firms, and the Federal Reserve. So America is largely indebted to its own system. The Treasury issues bonds, funds buy them, the central bank intervenes when needed, new dollars are created, interest payments are made, taxes flow back into the system. This is a massive financial loop, and it doesn't exist only in America. It exists everywhere in the world. Japan has carried enormous debt for decades. Moreover, its debt-to-GDP ratio is among the highest in the world. Under normal circumstances, this should have turned into an economic disaster, but it didn't. Because investors believe that the Japanese state will not completely collapse tomorrow. And in the modern economy, this is the most valuable thing of all. Trust. In fact, the global financial system operates more on psychology than on mathematics. As long as people believe the system will continue tomorrow, the system continues. But when trust breaks, everything can change incredibly fast. The 2008 financial crisis was one of the greatest examples of this. The world economy suddenly froze because banks stopped trusting each other, credit flows stopped, companies began to collapse, markets locked up, millions of people lost their jobs, and at that moment central banks launched one of the largest economic interventions in history. They created trillions of dollars. But here is a critical point that most people misunderstand. Central banks are not physically printing money. They are actually creating digital reserves. Then they use these reserves to buy government bonds. In other words, they support the debt in the system. This process is known as quantitative easing, and its impact was enormous because central banks injected massive amounts of liquidity into the markets, and the system started breathing again. But at the same time, something very dangerous also happened. Markets began to become dependent on central banks, because investors were now thinking this: if a crisis happens, central banks will save the system. This belief carried markets upward for years. Interest rates stayed low, credit expanded, asset prices rose, stocks rose, real estate rose, company valuations rose. And much of the world began to think this could go on forever. But no economic order in history has ever lasted forever. Rome collapsed, the gold standard collapsed, the 1929 system collapsed, Bretton Woods ended. Because every financial system eventually encounters the same problem: reality. At some point, growth slows down, debt costs rise, and the system becomes increasingly fragile. Today we're beginning to experience exactly this. Because the world is now facing not only high debt, but multiple crises at the same time. Populations are aging, productivity is declining in many developed countries, geopolitical tensions are rising, and artificial intelligence is preparing to change the fundamental structure of the economy. Meanwhile, states are borrowing more every year. America is now spending hundreds of billions of dollars just on interest payments. This figure keeps growing. And the interesting part is this: today, even the world's strongest economies fear interest rates. Because when interest rates rise, the cost of all debt in the system increases. Companies struggle, banks come under pressure, government budgets are shaken. But when interest rates are kept low, another problem emerges: inflation. So central banks are trapped. If they raise rates, the economy slows. If they keep rates low, the value of money erodes, and the world becomes increasingly dependent on a delicate balance. But there is a deeper problem here, because most modern states do not actually plan to fully pay off their debts. Yes, this is the biggest secret of the system. Debt never ends, it is rolled over. New bonds are issued to cover old ones. This process is called refinancing, and the global economy is largely built on this. Because for the system to continue, people must keep believing in the future. Investors believe states will continue to make payments tomorrow. Banks believe the system will not collapse. Citizens believe their salaries will retain value. The modern economy operates like a massive shared psychological agreement. But when trust disappears, things change. In 2010, we saw exactly this in Greece. Markets began to fear the country would not be able to roll over its debts. Bond yields skyrocketed. The economy shrank. Unemployment exploded. Then the IMF arrived. Austerity policies began. Taxes increased. Spending was cut. A country began to collapse not only economically, but psychologically. Because trust had disappeared. The same thing happened repeatedly in Argentina. In Sri Lanka, it turned into fuel shortages. In some countries, it appeared as silent inflation, and it is at this point that the true face of the system begins to show. Debt is not just an economic tool, it is a mechanism of power, because interest payments go somewhere, to bondholders, to funds, to financial institutions. So the system creates an invisible upward flow of money. tax revenues move from the bottom to the top. Interest income flows to capital owners, and this is why global inequality has been growing for years, because the system does not only grow the economy, it also redistributes wealth, and most people are not even aware of it. What happens when a government borrows more? New bonds are issued, banks buy them, central banks support the market, liquidity increases, and asset prices usually rise. Stocks, real estate, financial assets. Those who own these assets become even wealthier. But wage earners do not grow at the same pace. That's why some economists describe the modern system as an asset inflation machine, because the system rewards those who own assets, and this applies not only between individuals, but between countries as well. Since the dollar is still at the center of the global system, America can borrow much more comfortably than other countries, because the world still sees US treasuries as one of the safest assets. This is an incredible advantage, because when America borrows, the world finances it. Most oil trade is conducted in dollars. Central banks hold dollar reserves. A significant portion of global trade still flows through the American financial system. And this gives the US a level of financial power no empire in history has ever had. But this power may also be the system's greatest vulnerability, because a huge part of the global economy depends on a single chain of trust, the value of the dollar, US treasuries, and the belief that central banks can keep the system under control. If this trust is seriously shaken, the global system could change very quickly. This is why many countries have begun searching for alternative systems in recent years. China is developing its own payment networks. Russia is trying to reduce its dependence on the dollar. Central banks are working on digital currency projects, because everyone is thinking the same question. What if the current system does not last forever? Because for the system to continue, money alone is not enough. People need to believe in the future, and in history, when this belief collapsed, even civilizations were shaken. In 1929, people believed the American economy would rise forever. The stock market kept going up. Company shares traded far above their real value. People were buying stocks with borrowed money. Everyone believed the same thing. Markets will always go up. Then one day, trust broke, and within weeks, billions of dollars in wealth evaporated. Banks failed, companies collapsed, people became unemployed overnight. But the most interesting thing was this: the crisis was not caused only by money, it was caused by the loss of belief. Because the modern economy largely operates on expectations. When people start believing tomorrow will be worse, their behavior today changes, spending decreases, investments stop, banks become afraid to lend, and the economy turns its own fear into reality. That's why central banks today are not just economic institutions, they are psychological defense mechanisms. A single statement by the chairman of the Federal Reserve can move markets. Because investors are not buying today, they're buying the future. And perhaps this is why the modern financial system has become the greatest confidence game in history. Because the true foundation of the system is no longer physical. Not gold, not silver, not even oil. Expectation. People continuing to believe in the shared story. But here an even deeper problem emerges, because the world is now facing not only high debt, but slowing growth. In the 20th century, the system was easier to run, because populations were growing, production was increasing, new industries were emerging, so the economy was naturally expanding. Today, many developed countries are aging, birth rates are falling, the workforce is shrinking, productivity is slowing. But the debt system still demands constant growth. This is where the great contradiction of the modern economy begins, because an infinite debt model requires infinite growth, and nothing grows forever. That's why some economists believe the coming years may represent one of the most critical economic transitions in history, because for the first time, the world is facing at the same time record levels of debt, aging populations, technological transformation, and geopolitical fractures. And while all this is happening, artificial intelligence is preparing to reshape the core structure of the economy. Millions of jobs may transform. The way companies operate may change. Production costs may fall. But at the same time, income inequality may worsen. Because in history, major technological leaps usually concentrated wealth first. The Industrial Revolution did this. The Internet age did this. Artificial intelligence may do the same. And if wealth becomes concentrated in the hands of a smaller group, the debt system may become even more fragile, because the modern economy is built on consumption. If people stop spending, growth slows. When growth slows, debt pressure increases. When debt pressure increases, the system needs even more credit, and so the cycle begins again. That's why some economists describe today's system as an infinite expansion machine, because the moment the system stops, pressure builds. But here, the greatest irony of history appears. The world will never be able to pay off all its debts, because for the system to function, debt must continue to exist. What happens if the US fully pays off its debt? One of the world's safest financial assets disappears. Banks lose collateral, funds lose safe havens, global dollar flows contract. So ironically, for the system to work, debt must stay alive. That's why in the modern economy the goal is not to eliminate debt, it is to manage debt, and to preserve people's belief in the system. Because the moment trust disappears, numbers lose their meaning. A currency is only valuable as long as people believe in it. A government bond is only strong as long as investors trust the future. An economy only stands as long as people believe the system will still work tomorrow. And perhaps this is why the modern financial system may be the greatest collective story in history. Billions of people believe in the same abstract structure. They accept the same symbols as valuable. They assume the same economic order will continue, but no great system in history has lasted forever. The Roman Empire seemed eternal. The British Empire seemed eternal. The gold standard was believed to be permanent. Then the world changed, and perhaps the system we live in today will one day look temporary to future generations. Because financial systems cannot be separated from technology, power, and human psychology. Money is not just an economic tool, it is a technology of civilization, and debt is the fuel of that technology. That's why the world is not indebted to someone. The world is living inside trillions of promises made to the future, and as long as those promises are believed in, the system will continue. But if one day people lose their faith in the future at the same time, that day the world economy will not just slow down, it will transform into something entirely different.